so before that, let me just give you the link to my slide today. So I made a slide on this topic. So today I'm going to teach you about one topic, which is foreign direct investment. Only one topic for today. And then I have made a slide. So for you to, I think that you guys can download it later or now. Okay, so today we are going to continue the chapter, okay, the next chapter. We have one chapter left, which is foreign exchange. And then for the next class, I'm going to touch on, because today I'm just going to do FDI. So for next class, I'm going to do foreign exchange market, where I talk about the regional economic integration. Okay, and then for your final exam, one of the question is related to foreign exchange market lah. Okay, one of it. And another one, if I'm not mistaken, is FDI. It's actually a combination of FDI and what we have learned previously. So there are two questions in your final exam, FDI and also foreign exchange market. Okay, so let's take a look at for today's topic, FDI. I'm not going to use this. Mostly I'm going to use my slide. So we are going to take a look at this notes later. All right, so before we start with FDI, let's just recap first what we have learned in terms of entry modes. We have learned about several entry modes before. If you still remember, we have learned about, if you can see here in this slide, we have exporting modes, we have contracting modes, and then we have investment modes. And then for exporting modes, we have learned about the exporting, okay, export, where we have direct, indirect, and piggyback. And then we have also licensing. We have contract outsourcing, franchising, management contract, and turnkey contract. So today we are going to take a look at the FDI, foreign direct investment, which is here is investment modes. And then under investment modes, we have joint venture, or I call it JV. And then we have acquisition, and then we have greenfield FDI. So before we go further in the factors, in the impacts, in the challenge, so let's take a look at the differentiation between all these three modes. And then we are going to learn about their advantage and disadvantage. Okay, so formally for foreign direct investment, this is okay. So for FDI is actually an investment from a firm in one country into a business in another country with intention of establishing an active and lasting interest. So this is not, this doesn't mean like a passive investment. You have to be active and then with an intention for lasting interest. Okay, so the purpose of FDI is to expand the home country business to another country, right? So the foreign the foreign firm, they must have significant control interest in the investment, which usually means it must be at least 10% of voting stock in the target company, or it's equivalent to decision-making power, depending on the company structure that the company have lah. And then, like I've mentioned just now, the foreign firm making investment must be active in managing operation. This is not a passive portfolio investing. Okay, passive portfolio investing does not count as FDI. Okay, so this distinction is important for tax and regulatory consideration. Okay, so in general, most countries, like their national governments are very much like FDI to be in their country, because in general, FDI encourage economic development, economic growth, increased employment, that we are going to take a look after this. Okay, so the component of FDI, we have equity capital, reinvested earning, and other direct investment capital. So for equity capital, this is comprises equity in branches, in all shares, in subsidiaries and associates. Okay, and then for reinvested earning, this is consists of director investor share of earning, and then as dividends by subsidiaries and associates and earning of branches. Okay. And other direct investment capital. So this one is cover the borrowing and lending funds, okay, including the debt security, the trade credits between direct investor and direct investment enterprise. Okay. So let's take a look at the differences between these three methods ataupun entry. Okay, we have JV, we have merger or acquisition. Tak nampak Nah, merger, sorry, merger and acquisition, and greenfield FDI. So for joint venture, JV, this is where a firm forms a partnership with another company in foreign country. So if merger and acquisition, merge means that they merge lah, they combine with foreign company, they combine. And then for acquisition is you buy or you purchase existing foreign company. We are going to take a look at some of the example after this. And then for Greenfield FDI, this is you start a business. It's a wholly owned subsidiary in foreign country. Right? You start from scratch. You start from the ground. A startup subsidiary company in a foreign country. So when we talk about FDI, it doesn't just involve building up your country in a foreign market ataupun host country. Merger acquisition with a foreign company is also considered by as FDI, and joint venture as well. Okay, partner up with foreign company in a host country. So for joint venture, okay, for joint venture, the foreign firm and local firm create a third joint venture company for mutual advantage. Right? So what they do is foreign and local business, they combine resources. The goal is to achieve tactical and strategic advantage in the local market. Right? So basically, this is typically create a new third company with joint ownership. They create a third company with joint ownership because they wanted to combine resources, right? And JV company formed by contractual agreement between partners. So in this contract, they dictate ownership split between partners, and then how the decision are made and how profits and losses are shared. For example, here you can see Kellogg Foods US and Wilmar International Singapore. So they joint venture to manufacture, distribute, and sell breakfast cereal in China. All right. So for joint venture agreement, it's usually include the objective and goals of the joint venture. So contribution for both party in such as cash, physical asset, and customer list, administrative contribution. So it can be like a technical, any marketing strategy, list of contacts, or anything, okay, whatever. And then we have agreement on management and personnel, agreement on decision-making authority, details of the day-to-day operation management, a profit or loss sharing agreement, schedule for meetings and updates, and then also the duration of the JV and exit terms if the party wants to terminate their JV earlier ataupun early. Other terms specific to the JV such as confidentiality, intellectual property, branding, and so forth. Okay, so the advantages of JV. Okay, so as a company, you can have an access to expertise and context, right? So throughout this topic, most of the reasons or impacts, more or less the same, okay? Because each and every modes, they have their own advantages, disadvantages, okay? So when we talk about the impacts of FDI, so basically it's the same. It's kind of like a repetition later, okay? Because I have segregated between each entry modes, okay? So another advantage is definitely it can be shared knowledge and resources. So later we are going to take a look at some of the goal. There are three or four goals when we involve in FDI. So one of it is if we would like to seek for resources. So definitely by having FDI, we could have that, okay? Shared knowledge and resource. And then reduce market and political risk. Okay, reduce market and political risk. And leverage international brand. So for a joint venture, if you have partnered up with another company, right? And then so this one is can leverage your brand as a international brand. For the economies of scale, and then this is less costly than acquisition. Rather than we have to purchase a company or buy a company, so joint venture is much less costly compared to acquisition. And then overcome government restrictions, because in order for us to, let's say, to have a greenfield FDI, so we have to adhere, and then we have to need to take a look at the national regulations, okay, and then we have a lot of government restrictions, what can be done, what cannot be done in terms of the maybe taxes, quota, anything, okay. And then relation with national governments, okay, national relation with national government, avoid local tariff and non-tariff barriers, and it is a risk, it is a shared risk and cost of failure, because you partner up with another company, right? Foreign company. So the disadvantage here is, even though that is less costly, but it is still a large investment of resources. And then when you participate ataupun you join in joint venture entry, so you are locked into a long-term relationship. So let's say if it can be not beneficial for the company if the company is having loss, and then let's say if there is a disagreement, conflict, and so on, so you are bounded to a contract where long-term relationship. But what we have learned just now, we have a contract exit strategy, right? So what happens if a partner wants to leave early? So maybe that will cost you cost you something, right? To end the long-term relationship. And then transfer pricing problem. The transfer may create transfer pricing problem between the partners. And then the interest of partners may be changed over time. Okay, maybe the interests are changed, their objective are changed, and then when it's quite difficult when you are partner up, and then one party suddenly has the change of interest, so maybe it will affect your business as well. And then cultural and management differences. So I think in international business, this is one of the common issue, common challenge and concern, the cultural and management differences, like what we have learned previously as well. Loss of flexibility because it's locked in, and then locked in for a long-term relationship as well. So any decision making, you have to get agreement between the two parties. So you have lots of flexibility to how to manage your company. It can be in terms of anything. It can be in terms of decision making, in terms of future investment, in terms of managing personnel, and so on. And then confidentiality problem. So there might be loss of trade secrets, and then IP, okay, in terms of confidentially problem. And then lastly is moral hazard, okay, counterparty risk. Okay, the next one is the international mergers and acquisition. So mergers and acquisition are one of the three investment modes that we have seen just now, where merger means that the domestic company combines with a foreign company to form a single company as a new legal entity, and then identity of original company usually disappears in favor of the new, right? Um, so I know that this is not related, but recently recently I watched the HBO series, the Succession. So in that series, it explains a lot about, not it explains, it portrays, okay, it portrays a lot of business environment. So who watched the series, sorry, Succession? Anyway, joint venture, no, joint venture is differ with merge. Example, DG merge with Cellcom. Okay. Um, DG Cellcom, DG Cellcom is not FDI. Okay, it's Proton and Geely. Okay. So for merger is domestic company combines with foreign company. Okay, that one is merger. Um, and then okay, in this series, okay, in the series, it talk a lot about merger, where uh this merger and acquisition, where companies try to purchase another, try to acquire it because wants to have to increase its market share, try to have more power control to the sector, which is in the series is the media sector. Okay, so um it's kind of good if you are into business to watch it, okay, to watch the series. There are a lot of business jargons, there are a lot of I mean apa business terms that it's quite good for you as an MBA student to learn. Okay, just take the knowledge of the series, don't take all the drama because it is so dramatic. All right. So acquisition, a foreign company purchase a local, acquiring ownership and control of it. For a quiet company, they do not change its location or legal status, just the owner. Right. And then identity of acquired company is often retained by the new owners. Okay, um the advantage of merger, okay. The advantage of merger is um rapid access to foreign market. Okay, because once you combine and then you already have the company that is well known about the business operation, about the market. So when you combine and then when you acquire a new company, so you have a rapid access rather than you build from the scratch. Instant acquisition of clients, vendor, and then you have skill and established labor force already, because if you take a look at here, so a quiet company, they do not change its location, legal status, it's just the owner. So you get your personnel. However, it is very common for a company once they do, it's a concern for employees or personnel. Once they do merger and acquisition, they one of the common thing is they will bring, okay, for the foreign company, I'm sorry, for the new owner, right? So they will bring um their own employees, okay, in terms of manage in managerial level. So it's very common for employees or managerial level employees. They are scared of losing their job because uh new people is coming in, or maybe if they do not lose their job, maybe they lose in terms of their access, their power, and so on. Okay. Other than that, you have a skilled and established labor force that have been working in the company. So you don't have to invest so much in trainings, to send them for trainings, to for research and development, to research the market, and so on. Okay. And then existing and operating administration, like I've mentioned to you just now, we have skilled and established labor force. So everything is going as usual. Maybe there are some strategies change. And then in terms of culture, maybe some change because of the new owner. So it is up to the owner how to manage the company. And then after that, license are grandfathered in instant branding and marketing. So not change, doesn't change. And then one less competitor. Okay, so advantage is one less competitor, because if combines, normally it is in a same sector. Okay, they are competitors in the same market, same sector. So one less competitor by having mergers. And one way of looking at it, okay, one way of looking at it is one less competitor. Reduced cost, economies of scale, and less risky than greenfield expansion, because you don't have to do location searching, and then you already have the company, you have the company running already. Okay, however, there are common situation. Okay, I'm just talking a theory here. Okay, in practical it can be so much different. So in general, let's say if merger and acquisition, so might be the foreign company have already have like a trouble, and then maybe they need financial assistance, or they don't want to, the owner of the company doesn't want to proceed with the business. So it might be, okay, in terms of risky, I'm talking about risky. So it might be for a new owner to develop a lot for the company. However, even though that when they have to develop, when they have take a risk in acquire a new company ataupun merge with this company that having financial problem or whatnot, but it's still less risky compared to the greenfield expansion, because greenfield expansion, you start from scratch. You have to do a lot of recruiting. You have to do a lot of still market research. You have to do a lot of things, and that it might not just risky, it is costly as well. The disadvantage is this is a complex transaction where it will involve bankers, lawyers, regulation, and then mergers and acquisition specialists. So very, very complex, right? Very complex. And then as the consequences, mergers and acquisition quite costly. And then acquire hidden problem and challenge. And this is what I meant just now. Okay, so there might be, even though that it is not stated, like I've mentioned, the company might have financial difficulties, okay, hidden problems, and then challenges. There might be, I don't know a business term, but it might be like they are on the, apa orang panggil, very nazak lah kan. So it can be something like that. It can be labor issue. It can be like outdated technology, or there might be legal and tax problem. Okay, especially legal problems. So it will, like I've mentioned to you, it will be so risky for another company to merge and purchase company like this. Okay, but to make it worse is this is actually a hidden problem, and it is not made known. Therefore, before normally that's why we have a lot of you can see stakeholders before you can proceed with this merger and acquisition. We have to hire specialists to learn more about the company, to learn more about what is the right strategy, and then and so on lah. Okay. After than that, cultural differences. Okay, cultural differences. So the new owner is not someone. It's from the host country, right? This is someone who is in foreign country. So it might be difficult for them to integrate with the culture that has been practiced in the company. Uh, and then in terms of because culture it affects decision making and so on. So might be difficult to find solutions and then yeah, okay, cultural differences. Merger of software and control system, and you have to provide the new employees with trainings, new policy and procedures. Let's say if the company is no longer have the same mission or vision. So the new owner, they wanted to set up a new vision. They want to set up new strategy. They want to set up different way of doing their work. So you have to send employees for training on the procedure, process, or even you have another work policy. So you have to send your employees for training. So to summarize, mergers and acquisition, they are when two companies become one. A merger happens when two companies combine, and acquisition is one company buys another, and then the benefit of mergers and acquisition is rapid access to foreign market, and then it's combination of complementary capabilities, right? Because they have expanded their supply chain, distribution channel, and then reduce administration and operating costs. However, in terms of the challenge, is culture differences might lead to incompatible culture and management style. In terms of goal and ambition, maybe it will be different. Therefore, it can be for a new employer. Sorry, for the new employee, for the employee to trust the new owner, the new employer. Okay, you have to gain the trust between the employee, and not only that, between the partners as well. Okay, in merger. So historically, um, for international mergers and acquisition, they work out well, but also many of them are trouble, and it will end in failure. Okay. So here is Bayer Germany merges with Monsanto US, 66 million deal. Monsanto name drop product brands continue. Okay. So next is greenfield entry defined. So I think that this is very common, where a company starts a new company in another location, foreign country. Okay. So for greenfield entry, it creates a subsidiary in foreign country from the ground up without partners or acquisitions. It requires developing office and manufacturing facilities, totally new hiring employees, managers, and then creating a sales force. Okay, because you have to develop everything from scratch. You have to hire employees. It can be in the host market, or in the host country, employees, and you can also if we have learned, if you remember, we have learned HR before in last class. You can bring your team as well, okay, from the company to uh to to work in a foreign company. And then you have to develop supply chain and distribution network, learning and complying with local rules and regulation. Okay, basically the same. However, this one is you have to comply with the establishment from the establishment of the company. All right, maybe if to differentiate between mergers and acquisition in terms of it's ongoing, you have to comply with tax, you have to comply with any kind of like renewing license and regulation, employment law over there. Okay, but here is you have to, let's say, you have in order for you to build up a factory or building, so there might be some of the regulatory things that you have to follow. You might require license, you might require any apa orang panggil tu, assessment and so on. And then undertaking marketing promotion, okay, because you might have a great market ataupun a great branding in your home country, but this is you come with to another country with a new brand, so you have to undertake marketing promotion rather than acquisition and mergers, because that is already known, right? You just acquire the company and you might change. Okay, the brand, okay, maybe the brand doesn't change. Um, it can be lah, okay, it can be change the brand, but at least people know that this is a new branding or rebrand. But let's say for greenfield entry, this is a totally new and then a foreign brand, okay, international brand that might not be familiar in the market before. And then you have to developing market and customer. Yeah, okay. Costly and time consuming. So definitely this is a costly, time consuming, because you have to start all over again. Okay, so for example, like IKEA greenfield entry here in Casablanca, Morocco. Now you can see IKEA in Malaysia as well. They have several branches, right? So the pro and cons. The advantage of greenfield expansion. Okay, there's the advantage is including tight control of all business operation. This is your business, so you have fully control over it. Your administrative, your decision making, managerial team, everything, and then protect IP and trade secret, the economies of scale and scope, control of long-term strategy. You have full control of marketing, sales, and brand. How would you like people to know your brand? Okay, your marketing strategy, fully have control. And then it demonstrate a long-term commitment from to local people and governments, because if you build a company, right, it is for long term. Nobody wants to make a company for just short term or try and error things. This is long term, so actually you are making a long term commitment to local people and the governments that you are going to contribute to their economic growth. And then when you build a company as well, let's say a factory or um, any kind of building, so you open up a lot of employment opportunities. So this is what it meant by demonstrate a long-term commitment. You new job created in the local market. So when you create job, you have to make sure you have a responsibility as a company. You have a responsibility towards the people, right? You have, in order for a company to be sustainable, you have to show your commitment into these three things: people, profit, and also planet. So for profit, definitely you have to make sure that your company is fully operationable and then making profit. You have the responsibility to generate income for the company and also to contribute in the national level. And then for people, you have to take care of your employee, not just employee. You have to take in terms of your secondary stakeholders as well, your public, okay, the local communities in the surrounding area. So all these things. Okay, and then lastly is planet. So you have a responsibility to take care of the environment as well. And then ability to grow rapidly without partner. So you have much control over that without having to comply with, and then it's not in terms of in terms of partnership, it can cut much cost because you don't have to have a decision making agreement with the partner. Okay, that one is less time consuming in making decision because you have fully control. Most profitable long run entry model. Okay, however, definitely it has some disadvantage as well. You have to build the entire business from nothing. Okay, so it must be very high cost. Okay, there are high upfront costs, and then it will be a lengthy process, long time to market the product, and then you have to, unless when you go there, you already have the strategy plan, you have already outlined, and then when it completed, and then you just can and then maybe if you have built the market before you open up an FDI there, so it might work in favor in you. Okay, in terms of marketing, in terms of branding, in terms of market share. So you have to make sure people know you first. Okay, introduce first, even though that you are not there, but make it available, or how to say, make people know you first. Okay, and then unfamiliar government rules, regulation. So another thing is, if you build up from scratch, if you have partners, so there are local people who can guide you on always. But if you don't have partners, if you do everything on your own, so you might need to hire consultants, experts, okay, in all the government rules to make sure that you are adhering to all the rules and regulation, to make sure that your business can run smoothly without um, any legal problem. Okay. And familiar business ecosystem. So you have, when we talk about business ecosystem, it involves a lot of parties. Take supply chain, for example. So you have suppliers, you have distributor, you have all the intermediaries, right? So you need to have this in order for you to make it smoother, and then you have to choose the best one in terms of the cost, in terms of the quality, productivity, and so on. So for you to choose contractors, vendors, right? And then the culture as well. Here again, okay, the disadvantage is the culture. Um, so the business ecosystem, maybe the language use, the culture, the working hours, the way that apa orang panggil, the interpersonal relationship between the workers. So it might be a little bit difficult for you to integrate with the culture. Let's say, and if you bring some of your employees as well, so have to go for a cross-cultural training, like I've mentioned to you before. Potential political and cultural risk, liability of the foreigners. Okay, the foreigners meaning that I think in any country they introduce a campaign where you have to buy from local product, you have to support local product, especially here in Malaysia as well. You can see, I think from since I was young, we have this campaign barang buatan Malaysia, right? And then our government apa orang panggil, encourage us to buy the local product. Okay, so this is one of the liability of foreigners, and then you have to compete. It's very common in business where you have to compete, you have competition, and then in this situation, you have to compete with the local market or the local brand, where their government are encourage them to to support local brand or local product. And then easy to make mistake. It can be any kind of mistake, legal problem, legal mistake. It can be in terms of structure. It can be in terms of the wrong market ataupun not enough research and development. Okay, and then calculation of costs, and so on. so on. Okay, so it is easy to make mistake if this is not handled properly. So in summary, greenfield entry, they create a subsidiary from ground up, no partner, there is no acquisition. So without local partner lah. Okay, and then but the best thing is you have fully control, maximum control of all the business plan, strategy, operation, everything. And then you it allows close protection of your intellectual property and trade secret. So without having apa orang panggil tu, a fear a fear of losing it or someone leak it or someone exposing it. Okay, and then however, this is very costly for greenfield. It's very costly, and then slow to market. It can be here unfamiliar with the business ecosystem, and then but this is very good because it shows your commitment, long-term commitment. And then it is suitable, okay, for FDI is suitable for a large company where they have a very strong base in their home country, very large, okay, deep pocket, right? And then and also they have experience in international business, international market. So this is a good entry because the higher the risk, the higher the return, right? Okay. Let me see if I have any video to show. Okay, let's take a look at before we go for a break, let's take a look at the map, the trend first. Okay, let's take a look at the trend. Okay, sorry, I think my signal is not so strong. Bear with me, okay, hold on. Okay. So this is can you hear me clearly? Because I have a prompt here say that my internet connection is unstable. Boleh dengar tak?
Boleh dengar, Prof?
Okay. All right, so let's just take a look at this is, oh my God, 5 years ago, tak apalah. Okay. FDI by country. So I'm going to share with you later one website where you can find a lot of information. I think it's an interesting website for you because you can learn more about each and every country. However, maybe some of the country, their data is not available. So just keep on browsing. Okay, so let's take a look at this. This is 2019. I think the recent data that I have pun 2021. Okay, this is foreign direct investment by country. You can see the legends here. The red one means that this is FDI inflow. I don't like the ads. The red one means that very high FDI. So you can see here from the map, US, if I'm not mistaken, there are five key players here: US, Brazil, China, Singapore, Hong Kong, Netherlands. Okay, so these are all countries with a lot of FDI inflows. So Malaysia is here, but Malaysia is around 10 billion to 20 billion dollars. Note, for visualization purpose, only showing countries 10,000, 1 billion or more. Okay, and then you can see most of the country here. So for United Kingdom, 10 billion, Spain, Europe country, Switzerland, they they have a lot of FDI inflows as well. Okay, let me just share with you the link. Okay, and another website is this one. Okay, where you can find a lot of information. Okay, so this is the website I've talked about. Just as a guideline ataupun as a tool. Okay, one of the tool. Actually kita belum sampai part ni lagi. Okay. Okay. Actually, I'm here. Okay, global map. We already see the global map, and then this one is for analysis tool. So you can choose the country and then partner country will. So let's say, if you, let's take Malaysia for example, you can find here, and then so the overview of Malaysia. The level of income is upper middle income. Nanti you baca, okay? So what does it mean here? You can click here, and then for starting business core, this type of launching are shown below. So enforcing contracts, protecting minor investors core, what does it means, and so on. So you can take a look at here. And total FDI inflow is 3,492 million, about 2,000 million here. So you can see the inflows. Okay, in 2009 it went down for a while, and then it has been quite apa tu increasing, and then slowly nowadays it has been going down. Okay. So you can choose any country here, if but some of the country they don't have um, full data. So here in Singapore, you can see that it has been increasing, okay, compared to our country, right? Our FDI has been declining ataupun decreasing since 2018 just now. But in Singapore, the FDI inflows is quite increasing and increase. And then present abroad FDI outflow as well. So the highest is in 2017. Take a look at it, and then to learn more about the country. So let's say if your bosses ataupun you are the boss, you have planned to move your country abroad, not move, to expand your country abroad. So you can take a look at this as one of the tool. And then I think that here you have reference material as well. Okay, industrial classification. You have a trade map, market analysis portal. So you can play around with this website. Okay. Okay. Next is um more commonly FDI is categorized by purpose of the investment. Okay. So this is what I meant just now. When a company involved in FDI, so it can be categorized by the purpose of the investment. We have four. We have market seeking FDI, we have resource seeking FDI, efficiency seeking, and strategic asset seeking. So from the title ataupun from the key point here, I think that you understand. For market seeking, definitely it's try to exploit their market opportunities in foreign countries, right? They want to have market opportunities, exploiting market opportunities in foreign countries, try to dominate because the market are attractive in country. Let's say if the country have large population, and then not only have large population, but they also have a rising purchasing power. Okay, so market are attractive in this kind apa tu country can be, even though that it can be served as export, right? We can export to this country. However, it is more cost effective if we have large population and then market demand for it. can be cost effective in establish a presence in foreign market. Okay. And then it can improve as well customer service. For example, if you are providing service or a product, okay, and then if you just export, it might be difficult for you to be more active in customer service. But if you have presence over there, you have FDI over there, then maybe it will be easier for you to do customer service to facilitate your customer and so on, right? So for example macam what do we call like um yeah, nanti I fikir. Resource seeking. So resource definitely it is in terms of the natural resources that the home country they are not available, then it has in a foreign country. Okay, so natural resources in foreign country which are not available ataupun it's available but insufficiently available in the home country. So this can be when I say exploited, bukan exploited the bad way. Okay, exploited means that you can take advantage of it. You can take advantage of this foreign market. Bukan exploit tu. Okay. And as well, not only natural resources, it can be labor as well. In terms of cost of labor, okay, in terms of cost in labor. So by having FDI over there, you can get advantage by having a cheap labor in foreign country. However, okay, this is one of the negative impact of FDI. This is one of the negative negative impact of FDI where ini betul-betul exploit. Okay, where a company really exploit wages, salary and wages of the foreign labor. Okay. It's not even, let's say lah, kalau dekat Malaysia, okay, let's imagine if we are working for a Japanese company and not only that, if we are working in their country, so they pay us by our rate, right? By our currency. So they might be, all right, exploit the employee by giving task ataupun work position, workload that is not reasonable with the pay. Because of why? Because they view us as a cheap labor over here, right? And then we view others in other country as a cheap labor. So that is a negative impact of FDI. Yes, they create employment, they create new job. However, if you are a responsible company, you wouldn't exploit the cheap labor. Okay, you don't take advantage of the really cheap labor. And then and another thing is not only in terms of wage and salary, but in terms of rules and regulation as well. Let's say in some countries they don't have a strict regulation on employing children and and so on, and they don't have a strict, they have regulation but they don't have a strict monitoring, they don't have a strict implementation in those rules regulation. So this foreign company, they will take advantage of that by employing children and then employing people for more than their working hours. Okay, we have heard this, cases before. Okay. And then efficiency seeking. So efficiency seeking, motivated by the need of TNC, operating in large global production network and value chain. Okay, so for example, like this is in terms of like manufacturing, and they wanted to seek more efficient supply chain. They want to increase more efficient productivity uh, in terms of the value chain, and then research and development. Apa lagi? To delivery a particular service ke, right? So to increase the efficiency. Um, let's take a look at this. This reminds me of, so let's say for me kan, tadi I cakap tadi, sorry. So kalau efficiency seeking, Is it vertical or horizontal? It's vertical, okay? It's vertical because of why? Because vertical here, when the business merges with a foreign company to get more returns in existing value chain, okay? International suppliers to boost the existing business. So like I've mentioned to you, one of it is to increase the value chain effectiveness. And then in terms of their apa orang panggil itu, to deliver a particular service of the intermediaries ke apa ke. So this is efficiency seeking FDI is known as vertical FDI. And then lastly is the strategic asset seeking. So this one is motivated by the desire of investor to establish a presence in foreign country through the acquisition ataupun purchase of a local company. All right, so this type of strategic asset seeking FDI, it will not be, this is not be greenfield. This is lebih kepada merger and acquisition. Because of why? Because of alah, apa ada tulis kat sini kan? Okay, through the acquisition. Okay, this is suitable for merger and acquisition because of, like I've mentioned to you, one of the advantage of merger and acquisition is you can get the existing, you can get the existing operation administrative. You already have skill and established labor force. You already have the technology that they employ in the company. And then they already have, even branding is an asset, you know. So you already have instant branding and marketing. This is an asset for you. Okay, so-called asset lah. Asset seeking, strategic asset seeking. Okay. Okay, can we take a break or do you want to continue? Can we take a break for 5 minutes? Let me see if I have a video for you to watch. Okay, so I'm going to give you a video to watch while you are taking a break, while you are having drinks. Okay, so
Of a lot.
sorry. This video is quite long, so just enjoy and watch it and take a break as well. And this is interesting. Okay, this video is quite interesting about our country. So
If you're a business owner, then animated explainer videos are the best way to capture attention, get more followers, and drive more sales. They're engaging to watch, super shareable. The United States of America, the world's greatest economy, and the tiny nation of Malaysia have become two important economic and strategic partners in the 21st century. The two nations' relationship plays a critical role in enabling the region of Southeast Asia to grow. This is led by both bilateral trade the two nations share and how some United States-based companies often see Malaysia as their base of operations when entering the region's market. Oftentimes, however, international companies do tend to choose Singapore above all, but in some rare cases, Malaysia's attractiveness continuously tries to battle out competitiveness. It's often noted across numerous articles and institutes that Malaysia is even, in fact, the top country in emerging Southeast Asia for foreign investments. This is because of Malaysia's strong economic performance, highly qualified workforce, and a nation integrated within the global economy. Back to our topic of the US and Malaysia relations. The two have a strong bilateral trade volume. In 2021, they had registered close to 71.4 billion US dollars worth of imports and exports. Favored, of course, for Malaysia, as the Southeast Asian nation has always been known to have a strong surplus worth of exports to the US. Clearly, a sign that shows how strong of a demand there is for Malaysian-based products and services in the US. This huge surplus is more than likely a big figure that consistently boosts Malaysia's overall gross domestic product, as it is also evident across numerous years that Malaysia has always had a surplus with the US in terms of trade. Furthermore, the US has always had a strong inflow of foreign direct investments to Malaysia, one that has consistently grown over the decades it has done so. From the 1980s, when the US had averaged around $1 billion worth of investments flows to more than $10 billion annually in the 21st century.
This has always been evident across the numerous industries of Malaysia, whether that is through manufacturing, to which we saw big chip companies such as Intel establish a huge billion-dollar presence in the country, to ExxonMobil, where the U.S. oil and gas firm has proudly named Malaysia as one of their major oil producers and suppliers of natural gas businesses, and even recently, where several U.S.-based firms had gone onto Malaysia to construct data centers. The two nations, truly, in many ways, have exchanged vital key economic engines that encompass their neighboring countries. But how did Malaysia and the United States relations actually start? And what were the major key points that led them to where they are today? Malaysia-US relations have had very long and deep commercial and consular interests with one another, one that stretches way back to the 1800s, where the US had its own consular posts across northern Borneo. During the century, it even saw the emergence of the so-called American Trading Company of Borneo, where the company operated with Chinese investors and acquired lands in the country. The U.S.'s vast presence across Malaysia would continue to expand, placing landmarks across Georgetown to Kuala Lumpur and Kuching. Throughout the centuries that followed, until the 20th century, the two nations would continue to express interests with one another. From World War II to the Indonesian-Malaysian conflict, the modern relations between the two, however, started in the year 1957, when they had established official diplomatic relations. This saw their economic and political ties to be intertwined, one that would have a long, twisting story, led by strong demands of one another in terms of trade and investments, and political ploy that at times be seen as critical. Exports from Malaysia to the U.S. have always been a huge factor in the two nations. Malaysia was renowned for its production of numerous goods, even at a time when rubber had become Malaysia's most important export, to which the U.S. had imported the majority of the said commodity. Throughout the 20th century, American-based companies have also helped pioneer much of Malaysia's vast industries that stand today. It is said that companies such as Intel, Western Digital, Texas Instruments, and others have helped create Malaysia's electrical and electronic sector, which today, if you are not aware of it, is amongst the biggest and most important sectors in the nation. Their continuous economic partnership would, however, also attract numerous political strains, where at one point, former Malaysian Prime Minister Mahathir Mohamad has been critical of the foreign policy of the United States, citing numerous fallacies across different governmental actions done by the U.S. This is even evident in today's society, where Malaysia's government had been against the formation of the so-called AUKUS deal, a trilateral security pact between Australia, the United Kingdom, and the U.S., which the Malaysian government had warned against as it will raise military tensions in the Asian continent. Whether that would be a problem, however, is all but hard to discuss, as there are strong statements on the formation of such a deal, on its pros and cons. Anyway, back to our topic. The two nations, despite at times disagreeable states, still share a strong political relationship. Numerous heads of government would always visit one another's country and, at surprising times, would announce further partnership, deepening of relations, and more connectivity of each other's economy. One that, again, helped form the basis of a lot of Malaysia's vast industries. As noted earlier, Malaysia has consistently received around $10 to $15 billion worth of annual investments from the U.S. This has, according to a report in 2018, helped pave the way for over 200,000 workers to be employed in Malaysia. A stunning feat. Moreover, while economic and political relations are of utmost importance in any country, they also hold a strong education and community relations, where the U.S. had become one of the best international countries to either study or immigrate to from Malaysia. It is stated that Malaysia has been migrating to the U.S. at large since the 1970s, and today marks close to a 40,000 Malaysian American community in the U.S. Finally, the two nations also shared strong security cooperation and alliance since the 1990s. They are part of a number of military relations with the U.S. This ranges from the sale of military-grade equipment to high-technology devices, and even at times when the U.S. conducts international military education schemes. Today, the two nations' relations are even strikingly seeing stronger forms of cooperation. The U.S. keeps on importing Malaysian goods, where they too have created $1 billion worth of investments. The latest data provided by the Malaysian Investment Development Authority, published for the first quarter of approved investments in 2022, has seen that the United States has become the third largest source of investments, only behind Germany and Brunei. But while indeed the two nations share a still growing relationship, Malaysia's biggest partner as of recently has been the nation of China. China itself has become not just Malaysia, but around the Southeast Asian region and the developing world, positioning itself as the next big economic superpower. Its trade alone even surpasses that of the US, where the two nations had a bilateral volume of close to $180 billion. Unlike the US, however, Chinese exports are mostly favored. But this might be a given, as China-based products have become famous for being either cheap, of quality, and even at times necessary. Further, while the US is also a big source of investments, their investments are still under strong competitiveness across many Asian countries, largely from East Asian nations and other Southeast Asian countries. This is why numerous institutes have claimed that, indeed, Malaysia has become one of the best investment destinations on the entire continent, and thus paving the way for big economies to choose Malaysia as their destination. Well, either way, the US still holds a strong position in Malaysia. There are even numerous major mergers and acquisitions that have occurred as of late. One that a lot of US-based firms had done so. Firms such as the Blackstone Group, McKinsey & Company, Convergys, Accenture, and more have acquired big Malaysian companies. They had also not just purchased them, but also helped fund numerous goals and dreams of many Malaysian entrepreneurs. Lastly, the most recent economic framework established in May of 2022 is seeing a stronger connection with Malaysia and the US. The initiative, which is known as the Indo-Pacific Economic Framework, is a 14-member program that would help increase further trade and economic collaboration. This is often applauded by numerous Malaysian business groups, as it would truly help the two nations' trade prosper, although there is also some sentiment across the field against such. Anyway, the two nations have had profound miracles with one another, and also a mix of numerous political conflicts. While indeed it is true, they are not the only nations that do so. After all, the US has big stakes across the world, not limited to its economic ties, one that will really bring in numerous controversies and criticism. But what do you think? Let us know down below.
Okay. All right, so we continue. So you can see how it's actually Malaysia is being one of the best destination for FDI, right? And then how I think it's very common, and then in the videos as well said that China, it has been it's growing. However, it always associated with low quality and so on, right? And I have later I will share with you as well. One of the factors that made China is attracting so much not attracting, and then how their FDI is actually very blooming. Okay, so let's take a look at the reasons for FDI. Okay, so definitely is this is some of the reasons. Okay, please take note, like I've mentioned to you just now, your final exam, it's about FDI. So just take note of the reason for foreign direct investment. These are some of the reasons, and then you can find it in other literature as well. And please focus more on not just okay, I'm going to explain to you based on several things. It can be in terms of political, economic, and social, and culture as well. Okay, social is under culture. So you can see here in terms of new market, reduced labor, taxes, incentives. So you can see all of this is actually combined. So new market and customer, this one is under economic, right? And then reduce labor and operating costs, also economic, favorable taxes and incentive. This one can be political, it can be economics, infrastructure, availability of energy, water resources, okay, subsidies from the destination country, and the access to special economic zone. Okay, so I'm just going to explain more. So under the reason ataupun the determinants of FDI, right? It can be one of it is in terms of economic condition, where we are referring to the markets, we are referring to the resources. We so under market, we actually take a look at the in terms of the size and income level, and then in terms of the level of urbanization, okay, in that specific country, right? And then we take a look at the growth prospect in terms of economic growth, right? It can be reasons of for FDI. It can be as well. What are the factors that attracting FDI? I'm not sure if I put it here. This is impact. What? Okay, good. Climate. All right, basically the same. Okay, what attracts FDI as well, and then the reason of the company to go for FDI. So in terms of market, let's say if the size and economic level is good, and then the level of urbanization is high, it's the market is stable, and then you can see the market growth. Okay, and then it's also easy to have access to regional market. Okay, this is what I'm going to explain in the next class. If you are familiar with AFTA, okay, this is one of the regional economic integration, right? But if you want to study earlier, you can, here is, you can Google here, regional economic. Ni tak masuk dalam final, tapi it's good for you to learn, okay? I like to use this diagram. Ada diagram tak? Economic apa ini? Okay. So we have this one, economic integration. We have it start with a free trade area, and then we have custom union, we have common market and economic union. Okay, so one of it is AFTA. We have Asian free trade area over here. AFTA maksudnya ialah Asian free trade area. So we have a lot more. Okay, if you can see here, ada banyaklah lagi yang lain. Okay, so just study about economic integration more, but I'm going to cover it next class. So in terms of market, the efficiency in terms of the access to regional market, okay? And then next is in terms of the resources. It can be natural resources, technology, any kind of resources, right? You know, when we talk about resources, it's not just based on natural resources. It can be information, it can be technology, it can be skill, all right? The labor one, the labor resources. And then competitiveness. Okay, I'm still explaining about economic condition. In terms of the competitiveness, so how affordable and productive the labor costs are, the labor force. Okay, cost of sending your employees for training. And then in terms of managerial skill, how skilled they are, what kind of knowledge that they have, technical skill, conceptual skill. So all this, if you have a best talent in your company, all right, ataupun in the country, if you have the best talent for a specific sector, specific industry in that country, so definitely it can be what we call it, attractive for a company to go in investing in your country. And then macroeconomic fundamentals. So this one lah. Okay, taxes, incentive, the exchange rate, and then we take a look at the company's debt as well. Okay, company debt. All right, next is let's take a look at in terms of legal ataupun political and legal condition. Okay, so the first one we take a look at the macroeconomic policy and law. So this one is in terms of their fiscal policy, monetary policy, in terms of access to foreign exchange market as well, right? And then we take a look at the private sector policy and the regulation around it, the private sector, right? In terms of the promotion of the private ownership, we take a look at the stability of policy, apa orang panggil tu, the entry, okay, the entry and exit policy for a company to do FDI, whether it's easy or not. And some countries, for Malaysia, I think it is more easier. Okay, this is more easier now because we are promoting a lot of foreign company to get more FDI, okay, with us. And we take a look at support from the government. Okay, support from the government, because when we do FDI in a foreign country, we need to have a good support from the government. It can be in terms of anything, okay? How easy it is to deal with the government to obtain any license required. It can be anything now, right? I couldn't tell you exactly what it is, but several of it is how government make your job easier to build up the country, build up the company in their country. And after that, again, regulation. Maybe we can take a look at the industry policy, okay, industry policy and law, and also FDI policy. It involves like a pre-establishment of the company, after establishment, the monitoring process, the assessment process, in terms of another one, okay, corruption level. Okay, corruption level, whether the government is transparent or whether they are stable, right, ethical, things like that, right? All those things, the indicators ataupun the determinants of foreign direct investment. What are the factors that they look for before they invest in any country? Okay, access to special economic zone. All right. And then lastly is in terms of the company, their own strategy. All right. One of the reasons is their own strategy. So maybe they want to have a new market. Maybe they want to have new location. Maybe they want to have to outsource their operation, right? They want to have a strategic alliance with a foreign brand. They wanted to have more a company with more, what do you call, like stability. The country, they have a very low risk because it's so stable. It is economic is growing and so on. Okay, so it is based on the strategy of the MNCs. All right, next is let's take a look at this one. All right, I wanted for you to discuss a little bit, just a little bit after this. All right, but it's okay. I'm going to give you a few minutes to find information. So let's take a look at the FDI and national competitiveness. Okay, so let me explain first. For national competitiveness, we have 5 factors. Okay, we have 4 factors. We have factor condition. Okay, the first one is factor condition, and then we have demand conditions, and then we have related and supporting industry, and then we have firm strategy, structure, and rivalry. So I'm going to explain a little bit about FDI and this national competitiveness. I hope that you guys can pay attention for a while, because after this, you have a discussion question relating to national competitiveness, right? So for factors condition, right? For the factors condition, it means that this one is actually from Michael Porter's diamond of determinants of national competitive advantage, right? We want to link it with FDI. So for factors condition this is in factors of production necessary to compete with a given industry. All right. Under this condition, the component is if we have learned just now is resource seeking and efficiency seeking FDI. Okay, this one is the relevance. The company try to when they in terms of the factor conditions, the company try to seek for resources and then also for the efficiency. So this can be I'm basically akan ulang balik apa yang tadi I cakap. Okay, so this basically kalau resource seeking, it can be natural resources, it can be the skill labor, it can be the capital, it can be the modern infrastructure, it can also be university because university are producing knowledge. Okay, they are producing the graduates with knowledge. And then these graduates, they will become a resource where they have a lot of information, what they have learned in the university, in classes, and then they're going to implement it in the work, in the job after that. Right, so this is actually a factor condition as well, natural resources. Okay, and then what else? It can be in terms of efficiency seeking. Efficiency seeking, the quality and skill of the labor, and then factor that can speed up, factor that can speed up your business operation. Maybe it can be in terms of infrastructure, infrastructure in terms of the road, in terms of transportation. It can be in terms of airports, I think. All right, easier for you, the logistic, right? Easy access to transport your product. And then not only that, all the infrastructure, communication, right? Communication, and so on. Technology, okay? Technology is one of the resources as well. Faham kan? So that one is factor condition. And for demand condition, so this one is market seeking. Okay, market seeking. So tadi apa I cakap dalam market seeking is they try to gain competitive advantage. They try to build up here. Okay, exploiting the market opportunities in foreign countries. Maybe they see demand, right? Demand. They see a lot of large population. And then this population, they have high buying power, right? And then they wanted to have, maybe they have, let's say, what do we call, like a, lifestyle where they appreciate or they bought foreign brands, and then and they welcome, okay, all this population, they welcome about the brands abroad, okay, the country's product, they will be most of it is about the market lah, okay, it shows a favorable demand, a favorable condition, and it relates to the apa orang panggil population were exposed to the foreign market. Number 3 is related and supporting industry. Okay, related and supporting industry where they have, meaning that they are internationally competitive. All right, they are internationally competitive, and then this industry, they have many firms investing abroad. Okay, where they can get supporting enterprise from other country. Let's say, for example, like in service and supplier industry abroad, so they are going to have a lot of market presence already, and then they have like I've mentioned, a supporting industry. Okay, so for MNC, okay, for MNC, they are more likely to invest in country where the local firm can provide high quality goods and service. All right. And then not only that, and then in terms of the government support as well. And then it can be how private company is being facilitated over there. Okay. And lastly is a firm strategy, structure, and rivalry. So this one is in terms of the strategy just now. So this one is how the firm ataupun how the company is created and organized by the employer. And then it relates to corporate culture. All right. They have strong corporate culture. They have a good structure. Many skilled people is managing the company, good structure, and then they have good rivalry where they are known. Okay, they are known with their competition, and then they are well known lah. Okay, so this is another the determinants of national competitive advantage to determine which one of this factor is your country is more favor ataupun you dominate it. Okay, factor condition ke ataupun market condition ke, related and supporting industry and firm strategy, structure and rivalry. So under Michael Porter's, they have to evaluate, they have to analyze these conditions ataupun these factors to determine which is the best location or which is the best country for you to invest, or which country for you to do your FDI. Okay. So the discussion question here, all right, referring to determinants of the national competitive advantage just now. So let us ask ourselves, okay, in Malaysia, which one is the strongest one? Which factors are the strongest, and then which one is the weakest and why? Okay, so maybe you can reflect it, right? The discussion, this question, sorry, and determine in our country. So which one is the highest? Which one is the weakest, right? And then try to take a look at other countries as well for USA, Brazil, UAE, and Japan, okay? So I'm giving you, this is individual, okay? This is individual. I think I will give you like 5 minutes to figure out, to learn or to find resource, and then you can just put in chat here, okay, to discuss about this question. What about other country? For example, like USA, which factors are more, let me, macam mana nak buat? Okay, which country, based on this factor condition, related and sporting industry, demand and firm, okay? So what about other country? Which one is the strongest? Which one is the weakest? So I give you 5 minutes, and then if you have the answer, just write it down here, and then we are going to discuss the answer later. Okay, so I give you 5 minutes. How to say their condition first? Okay, for example, like USA, they are in terms of the economic system. So they are capitalists with and then they have a free market principle, and then for political system, they have similar like us lah, okay, federal. Then they have presidential republic, and then for USA, the geography is very large, right? Very large. And then for Brazil, mixed economy, okay, mixed economy. They have growing, okay, industrialization and also in agriculture, right? And then in terms of culture is very good. Okay, they have still preserving their culture. Okay, I think it's like Malaysia preserving the culture. And then it is they have different ethnicity, right? For UAE, their economic system is your friend stayed here. Okay, UAE. This this one is in Malaysia. Okay. Thank you, Fun Yin Teng. Okay, I'm going to discuss it after. So for UAE, we can see the industry. Okay, all industry. Okay, all export, and then also similar like other country, diversified economy. In terms of cultural, influenced by Muslim. Okay, it's already have strong Muslims practice. Okay, Islamic practice. The tradition is all related to Islam. Political system a little bit different. Okay, they have like a monarchy. In terms of Japan, very high developed. Okay, for Japan economy is very high developed. They have advanced technology. Okay, they have advanced technology, and then in terms of cultural, still okay, preserve some of the cultural tradition and so on. All right, and then they have a huge bukan huge apa, they have a strong structure. Okay, they have a strong structure. They have a strong structure compared to USA. Not really. Okay, they have a strong structure. Also a monarchy. Okay, Japan, they have monarchy, and then they have like Malaysia, parliamentary government. And then for geographic, might be limited. Okay, might be limited. Therefore they have limited natural resources. Okay, so one of our friends here said that in terms of Malaysia, the strength is skilled workforce in Malaysia. Okay, yes. However, the weakness is limited research and development infrastructure. Okay, so under the demand condition, for Malaysia, growing and diverse consumer market. Okay, I agree, because we can see that we have a population, and then we are exposed to having to try, okay, the population now is exposed to try foreign service, and then product. Okay, international service, international product. They have even though that we also have apa orang panggil tu, income classification, but we still are in favor of international brands, international product, and so on. Okay, yes, diverse consumer market. The weakness is it's quite hard for a domestic market, less sophisticated domestic market. Supporting industry is very strong industry, for example, like electronic and palm oil. And then the weakness is vulnerability due to over dependence on certain sector. Okay. And then in terms of firm strategy, adaptive business strategy. Okay. We have shown a lot of company have been there for a long term because of good. And then we can see as well in Malaysia the promoting of good governance. We have a lot of regulatory on good governance. So in terms of business transparency, they are encouraging it. Okay, adaptive business strategy. However, is intense competition and potential regulatory constraint where lack of monitoring, lack of enforcement. Okay. All right. So for Malaysia, the strength, according to our friend here, is economic performance. And then the weakness is maybe in terms of this one, all right, in terms of related and supporting industry. But Malaysia is very good in terms of the fact that economic performance. Okay, economic performance. It can be demand and also factor lah. For USA, their strength is innovation, labor market, so definitely is here factor condition, but the weakness is income inequality and healthcare access. For Brazil's large consumer market, so this one is a demand condition. And then the weakness is low investment in consumer confidence. So it can be in terms of related supporting industry. Strength, telecommunication, health, gender parity. So that one is factor condition. Weakness is economic diversification, innovation, entrepreneurship. So innovation, entrepreneurship, we can see that here lah, firm strategy. Okay. In terms of innovation, entrepreneurship skill. Economic diversification, so it can be related and supporting industry. For Japan, technological advancement, so factor condition. Okay, strong manufacturing sector. And weakness is aging population and low immigration. So it can affect the demand condition because of the aging population. So thank you so much for this one is Khalifah Noor, right? Khalifah Noor and Pun Yen Ting. Okay, thank you so much. It can give you some of the picture, okay, the bigger picture on how in these four countries, why I choose these four countries, because you can see that they have a little bit differences, okay? The little bit differences in terms of what they are great at, what are the things that they excel in, if we are trying to compare between these four things, okay? And then Nur Suhada said, positive strategic location, launchpad into Asian. So, this one is in Malaysia, okay? Competitive cost, skilled labor, exactly. We have very good in terms of the factor condition. But the negative one in terms of political instability and perceived high level of corruptions. Yes, very good, okay, in terms of this one. Related and supporting industry, and some of the industry like your friends mentioned just now, we are heavily rely on a specific ataupun a certain industry. Okay, thank you so much. All right, so let's just continue. I tutup chat, I tak nampak chat. Okay, so let's just continue on the next one. Okay, global characteristic of foreign direct investment. So here you can see that what make it for TNC and MNC, okay, TNC is transnational company, right? So worldwide sourcing supply chain management, because this is what we have learned, okay, global supply management. But before that, I just wanted to share with you, okay, the rising FDI in Indonesia and Vietnam, for example. Okay, this has started in 10 years before, has been started 10 years before. We can see that Indonesia and Vietnam, a lot of FDI has been, they have a lot of FDI inflows. Okay, the main attraction of these countries are their abundant natural resources. Okay, their abundant natural resources. And then they have a huge market potential, and then they have another thing, Indonesia in terms of population. Okay, in terms of population. And then they also have so what the government is doing, okay, what the government is doing here is a rising law, okay, a rising law in providing for example, like assurance or protection for investor in their country, okay. And then a lot of things that they do, okay, they try to do a lot of things. This is to encourage the economic growth in their country, right? After they are now very growing, okay, they are growing. And then government as well encourage a long-term commitment with all these investors. And Vietnam, okay, so Vietnam, the government, they continued with the new economic reform, also improving the legal, the policy, the legal environment in labor-intensive industry. Okay, labor-intensive industry. Okay, so for changing global characteristic of foreign direct investment, we have talked just now, okay, efficiency seeking. So let's say if worldwide sourcing supply chain management, this one is to efficiency seeking FDI that we discussed just now. Okay, global market presence, this one is market seeking. We have a lot of customer demand and so on. Cost minimization, intensive use of ICT and automation. Customized end product, right? Because of the demand, right? Because of the demand, different market might require different product, so that you have to customize. All right, one product cannot cater for all the market worldwide. For example, in Malaysia, you have to, let's say, okay, you have to integrate everything into a Malaysian lifestyle, for example. Okay, and our lifestyle nowadays are changing into maybe there is a new concept which is minimalist. Previously, maybe we don't have that, and now you can see that how to say, the concept of minimalist kan, dulu kita tak dengar, dulu kita dengar konsep yang whatever we have lah previously. Okay, So nowadays, everything in terms of clothing, in terms of home improvements. Before this, every house looks like IKEA, IKEA showroom. Okay, I'm sorry, no, I'm joking. So every house look like an IKEA showroom, but now, we can see, okay, the transformation. It looks like a little bit like a Japan, okay, because we have what we call like a brands like Muji, Jet, and so on. Okay, so changing, right? So maybe what IKEA will do, okay, to introduce a product that match this lifestyle, match this demand, okay, because of the customized end product lah. Different market, they want different things, different tastes. All right, and then FDI in manufacturing and assembly is primarily flowing to more middle and skill. Okay, and other than the rest lah. Okay, this one you guys can read. Okay, so FDI is actually can act as a substitute and also complementary. Okay, substitute meaning that when a firm decide to invest and produce in a foreign country to serve the customer directly. Okay, and then for complementary means that when efficiency seeking firms, they look for the best location to produce and export their product. So here it comes to the next topic, which is this one. I'm not going to repeat it all over again. Okay, but basically this one macam lebih kurang sama lah. Okay, the impact of FDI. I'm going to touch about the location after this, okay? Impact of FDI in home country, you can see here we have positive and then we also have negative. And impact we have on home countries and also in host countries, okay? Two different things. So for home countries, definitely income stream generated. I think you guys understand, right? We have take a look at the advantages of FDI before. So with that advantages, it bring a good positive impact. Yang dekat tepi sini GDP growth, increase of productivity and whatnot. Okay. Negative FDI. So local producers lose their market position. We have talked about that just now as well. Unfair competition and also displace local businesses. So what FDI is doing to the home market is it kind of like jeopardize the local business because they have to compete, right? And definitely it's not unfair competition because there's FDI, they might have high advanced technology, they have skilled workers to compete with the SME, to compete with a local company where they don't have all this technology, machinery, assets, and so on. Okay. And another thing in terms of the labor costs, all right, by exporting job abroad, the labor cost here in Malaysia will rise as well. Okay, so it's a disadvantage it's very complex, right? It's a disadvantage for a company because they have to attend the higher cost of labor, but this is a good thing for the citizens because finally, by having a lot of FDI, actually we can earn a lot more because we try to compare our kita punya gaji, our wages and salary with companies from abroad. Okay, if that company from abroad can pay us this much, why you domestic company, we should have been paid the same amount too, right? So it's a complex thing. If you are a business, you might have to invest more on labor, but if you are a citizen, then this is actually a good thing for us because we can finally get better pay. Okay, impact on host country. Okay, the economic dimension, ada banyak dimension ke? Environmental, okay. So in terms of economic dimension, sama juga impact of economic growth, impact on capital flow and stock and tax revenue, and then impacts on employment, wages and skill, and FDI and technology transfer. Technology transfer because we learn the technology that in the foreign, and then we can, this one is host, and then for the home country or for the company, right? So they can integrate, they can learn about the technology that has been implemented in that foreign country. Next is this one is in terms of employment condition, right? We have direct and indirect effect, positive, negative, and positive, negative. So I think you guys can read this. I also have touched a little bit about the wages, okay, hiring and promotion and so on. So there is an explanation here, so can read. Next is in terms of social and environmental dimension. So the impact on poverty reduction, right? However, okay, this is actually, like I've mentioned to you just now, right? In terms of employment and income, it can be both positive and negative. Depend on how do we look at it and who you are, if you are a business and if you are a citizen, and that if you are a government, okay? So in terms of there are a lot of scholars, they don't find out the relationship between employment and FDI and poverty reduction. They don't find significant relationship, and then but some of the studies they do find relationship, and then they say that FDI can contribute to an impact on poverty reduction. For example, like giving a lot of employment, FDI, they open up a lot of jobs. So in terms of employment, and it is like a chain effect, right? A lot of employment, so a lot of local people, they can work. When they work, they get income, and then when they get income, they can improve their standards of living. Once they improve their standard of living, it can lead to economic growth when they spend. Okay, so that is basically how FDI give impact on poverty reduction. But like I've mentioned to you just now, if the competition is very high, and then in terms of employment, it is very difficult, it's very high competition. I think this is what we have experienced now. All right, we do have a lot of work, we do have a lot of companies hiring, but the competition is very high. Okay, I think for someone who try to look for a job, a decent job with a decent pay, I think if we ask them, it is a struggle for them. For us yang dah bekerja, maybe we don't feel this because we have a value added things, which is experience. We have and I'm not sure, like it's very good that you guys are studying, because now that you have apa orang panggil tu, experience, and now you have a qualification as well. Okay, so it's very good. Okay, it's very good qualification and experience. But for fresh grads, I think it's not difficult to get job. It's difficult to get decent job with a decent pay, in my opinion, right? In my opinion. And then for those who has been, quite late to the employment environment, contohnya macam if you are late 20s, early 30s, maybe and then you don't have experience, so maybe it's quite difficult for you to find a job with a decent pay, or else you have to start with a fresh grad salary lah, definitely, because you don't have experience. Okay, nowadays the company, they have a lot of choice, they have an excessive pool of talent, so they took advantage of that, right? That's why I said that it depends from the perspective. Okay, it can be good, it can be bad, and then for a company, if the company willing to hire any employee with a decent pay, and then cultivate their skill by sending them to train and so on, training so on. So I think that would be good lah, but more you have to spend more cost before you can get the actual output. But if you can get it, then it will bring you good returns lah after that. Okay. All right, impact on environment. So a lot of FDI, it can lead to deforestation because you build up you build up factories, you build up firms over there, and then you develop. But impact of environment, this deforestation, it can also impact in infrastructure. Okay, let's say if sebelum ni dekat kawasan tu there is nothing over there, but you build up a university, for example. Okay, I have this one. I don't know if I'm allowed to say that, but I went for an event. Okay, when I think like previously I went for an event in University of Nottingham, yang dekat Semenyih sana. Then while I was driving over there, I was thinking like I would never ever work here because of the location. But now you can see because of the university yang dekat tengah-tengah apa namanya tu hutan tu kan. But now the land has been developed. Okay, we can find a lot of, even my friends, few of my friends actually purchased house over there because the land is developing. Right. Got good and bad lah, right? Good and bad impact. Okay. And then in terms of pollution, more businesses going on, but this can be taken care of if the government employ ataupun enforce good regulation, okay, for to combat with this pollution. For example, like they have a energy framework ataupun they have rules and regulation that company need to comply. Okay, yeah, this one, environmental regulation. Okay, so last part, okay, last part. What constitute a good investment? Climates, okay. This is starting a business. I think this information is quite important. It's quite beneficial for you if you plan to expand your company, and then if you would like to present to your managerial level, top management about to went abroad to starting a business. So what are the things that you should take a look at, right? Dealing with the construction permits, these are some of the bukan indicator, these are some of the, what do we call it? Activity ataupun these are some of the criteria that you have to take a look at. Okay, in terms of paying taxes, to register the property, to trading across border, and then I have put explanation over here. Okay, and then the strength of legal institution as well. So the getting credit, how actually easy for you to, in terms of movable collateral laws and credit information system, minority investor, okay, what are their rights, and then how do the government over there promotes the culture of corporate governance over there in the foreign market, enforcing contract, resolving insolvency, and labor market regulation. Okay, so these are some of the components ataupun criteria that you have to take a look at. To determine whether this country they have a good investment climate or not. If it's too complex, and then if there is no regulation to protect the, for example, minority shareholder rights, so might not be favorable, right, for investment climate. Okay. These are some of the sectors for attracting sustainable FDI. Power sector. Okay, what you can do is, let me just make it bigger. Some of the ideas. I guess some of the ideas or some of the market that you can take into power. Okay, in terms of the distribution of electricity, transmission, transport, the investment in roads, ports, railroads, telecommunication, fixed line, mobile, and internet. Okay, food security and agriculture. When I was in my study, we have heard a lot about food security. So a lot of research in terms of agriculture, right? Agriculture, and then apa orang panggil, the technology in agriculture as well to enhance this thing. Climate change mitigation, so relevant infrastructure, renewable energy, and so on lah. Okay, this one you guys can read. So when you have determined the strategy, okay, investment strategy development, So you prioritize your target market, sectors and investor, and then you revise organizational commitment, targeting process. And then once you have targeting process, you tailor the marketing plan. Okay, build your marketing effort based on the prioritized market sector invested. So this is actually not easy. I need to have a proper planning and strategy for this. Okay, the action plan template, you need to make sure that you have people to do this, enough manpower to do this, a good research and development department to facilitate this, and then develop well the investment proposal to raise awareness among investor. Um, and so on. Okay. So last part is about choosing a site ataupun choosing a location. So we have 5 stages. Define project. All right, define project where you should identify location, drivers and key location factors. What are the factors that is favorable to you? What are the things that you look for? Maybe in terms of access to natural resources, or is it you want it to be in a urban or city center? If you want it to be, it depends on your strategy. It all depends on here, okay? Your investment strategy development, and only you can come out with this stage in choosing the location. So stage 2, normally it is like long listing where you choose 8 to 20 location, and then you identify the strongest fit with key location factors that is going to help your business. Generally a mix of cost and quality factors. After that, you do a short listing up to 5 location where you have to find the strength, weakness, trade-off, okay, build a modeling and so on. After that, you select sites up to 3 locations. This is where you go for a market visit, site visit, and financial modeling, calculate everything, okay, cost analysis, and so on. And after that, once you have determined all of that, then you can do your establishment. This is a part where you should find information about this thing lah. Yang tadi kan, getting electricity, registering property, and then dealing with constructions permit and so on. Okay, set acquisition. All right. So that's all for the FDI topic. Let me see here. We have covered about this. Government policy and instrument. Okay, government policy and instrument. So types of policy formulated by government, encouraging outward FDI. So what government do is they can encourage local company and other investors to embrace FDI through formulation of policy that they provide for insurance program, removing the double taxation of good and service, and then use political influence as well to ensure host country lowers entry restriction or for investor. Okay, and then if restricting outward FDI means that they formulate policy to limit, to set restriction for the outward FDI, where the host country have manipulated taxation rule to attract foreign investor, right? And also some of the restriction can also arise when there is a political differences between home and host countries. Tak kawan lah, tak baik kan? So the government can formulate policy to restrict outward FDI. For host country policy, okay, if they encourage, so removing of the trade barriers, okay, introducing trade concession, low interest loans. This is how for them to attract all the, oh, I forgot to share with you the video. Okay, last. Then the government can implement restriction on ownership of the business foreign in some sector of the economy. Okay, so I have this video, but this one is not really talking about policy, but what they do in Greece to attract investor. Okay, but it is actually at the end of the video, so I will.
Perfect weather conditions all year round, a favorable location with direct connections to almost everywhere, amazing islands, and
This is
unparalleled
about
coastline.
great tourism attracting
Friendly,
FDI.
highly educated people, a famously healthy cuisine, and many more. New government policies and spending on infrastructure, coupled with billions of euros in private investments, are elevating Greece into the next era. In the last 5 years, a large number of new hotels were launched, and many more are coming to the market. And we at Grivalia are doing our part. With the support of our institutional shareholders, we are investing hundreds of millions of euros in the ultra-luxury hospitality market around Greece. From the Athenian Riviera, with the upcoming one and only Aesthesis at Asteria Glyfadas, to the astonishing Amanzoe in Portocheli, to the Cyclades Islands in Crete. And one more flagship investment, a private resort on the Petali Island complex east of Athens, will be a world destination and a masterpiece of sustainability. We strongly believe in the prospects of our country, and I would definitely encourage everyone to come and visit us.
And then another thing is you can see how this one, how China, they create a free, it's okay, this one, just watch this. This is actually related to what kind of ice cream is that?
And printed together $26 trillion. I traded for 30 years and did.
Ever wondered why China kicked off the game-changing pilot free trade zones back in 2013? We're about to dive deep into the fascinating world of these zones. Starting with Shanghai, imagine a place where goods can roam freely, stored and processed without those pesky customs duties. Curious? Hit that subscribe button for more thrilling insights into China's economic game plan coming your way. China initiated the pilot free trade zones as part of its economic policy in 2013, aiming to boost foreign direct investment across different industries in various regions. The first pilot free trade zones were established in Shanghai in 2013, followed by Guangdong, Tianjin, and Fujian in 2015. These zones, also known as bonded zones, allow certain goods to be stored, handled, or processed without customs duties and taxes until they enter the domestic market. Companies within these zones enjoy benefits such as lower corporate tax rates, import tax exemptions, currency conversion freedom, streamlined customs clearance, and access to diverse logistics services. Due to the success of the initial pilot free trade zones, China expanded the concept, establishing a total of 22 pilot free trade zones. The newest one, established in 2023 in Xinjiang, west of China, aims to support China's Belt and Road Initiative. Each pilot free trade zones offers unique economic incentives beyond trading, aligning with the government's planned economy. The Shanghai Pilot Free Trade Zones, launched in 2013, covers 120 square kilometers in Pudong and consists of special supervision areas for customs and areas dedicated to finance and advanced manufacturing. The Waigaoqiao Bonded Zone focuses on international trade and logistics, while the Pudong Airport Comprehensive Bonded Zone integrates airport operations for various services. The Waigaoqiao Port Comprehensive Bonded Zone serves as a logistics hub, connecting export procurement centers and distribution bases. The Jinqiao area emphasizes high-end services, financial systems aligned with international norms, and innovation in government management. Jinqiao is also a hub for advanced manufacturing, strategic emerging industries, and an ecological industrial demonstration zone. The Zhangjiang Science City focuses on innovation, aiming to become a national science center, while the Expo area is developed as a hub for the headquarters economy, shipping finance, and high-end services. The Shanghai Pilot Free Trade Zone simplifies trade procedures, reduces bureaucracy, and creates an attractive environment for foreign companies. It provides incentives like reduced tariffs, simplified customs procedures, and flexible regulations on foreign investment. The zone has served as a testing ground for economic and financial reforms in China, implementing policies such as a negative list system to restrict foreign investment only in government-restricted industries.
Since its inception, the Shanghai Pilot Free Trade Zones has attracted multinational corporations like General Electric, IBM, and Pfizer, leading to the establishment of additional pilot free trade zones across the country. Thank you for watching. If you're interested in captivating stories about China,
Okay, so you can see, right, some of the initiatives that made by the government it relates with what we have learned just now, how to create a good investment climate, like it has mentioned in the video. All right, so I think that's all for the topic today. I hope that you guys get some information, right? And I hope that you guys get a lot of information from this slide. You can download this slide. I have given you a link, and then please study more on FDI for your final exam later. And yes, please put reference in your final exam. Okay, if you use reference, you can put reference, use in-text citation as well in your final exam. Read the instructions. Okay. All right, so I guess that's all for today's class. Is there any question?